Good morning, everyone. Looks like we have a little profit taking in Globex overnight, but it definitely concerns me. So let me just start out by saying, in a rip your face off short covering rally like we have seen the past few sessions, most of the time you don't get much of a chance to get in, and there's not too many pullbacks. What I saw yesterday, and it was somewhat predictable, as the market began to stall at 3,800. The market I'm referring to, of course, is the S&P 500, which I view as the mother of all U.S. stock market indexes. And what we had at 3,800 were a number of issues. Certainly we had a high volume node if we look at the volume, recent cumulative volume at price. And we also had our what we call our volatility trigger, which is sort of a point in the options market where the market will switch from positive to negative gamma. In other words, we could call it another place for headwinds and tailwinds. It's not an easy area for the market to conquer, whether we're going lower or higher. When we're coming lower, it acts as support. When we're trying to go higher, it acts as resistance. So far, all of that was predictable. And, you know, maybe I'm being too greedy. We've just seen a huge move, a 5% move in the index. We got most of that move with our swing buy signal on Monday, so maybe I'm asking too much. But I am on pins and needles for a variety of reasons. I don't have time to go into all of them here this morning, but I thought what we would do is take a quick look at the options market because it can give us some insight into what is going on. And you'll see on my screen this comes from Spot Gamma, some very important levels in the options market. And going over those just briefly, you've got the put wall down here at 3,600. That's where most of the puts are accumulating and again should act as support. But remember, that is also the key support in this market. 3613 was the recent low. We take that out, and I would predict with the air pocket below us, we've got a big drop at least to 3,300. And of course, we're going to eventually get to that 3,000-ish target that we've set. Volatility trigger has now dropped from 3,800 to 3,755. That's not going to make life easy. And we have the call wall dropping down to 38.35. So the put wall is where most of the puts are concentrated. That's where most of the calls are concentrated. Put wall will be act as support, call wall resistance. But the bottom line is what we should be seeing in the options market is people, traders, investors adding to their call positions. I joke around, man cannot live by puts alone, but all we're seeing right now is people moving around their put positions, trying to buy puts, at least now at better prices, that the market's up 5%. And they're also buying volatility. So we just still see this protective mood. But now with a 5% rally, we would expect, if we think this rally's got some legs, we would expect to see more call buying. And yesterday it was fractional. So that is not encouraging. So going back to the macro picture here, what I've been telling people is the ultimate low in this bear market will come next spring, but the most important low in the near term will come around the 21st of October. I'm not going to make any predictions as to what that low will be, but I suspect it will be equal to or lower than the low we just put in around 3613 in the S&P 500. There are lots of reasons for that, and the way you can find that out is to go over to our blog at blueprinttrading.com, and we're publishing things there daily. Some things are available to the public that can help you assess the current environment, which I think we all know is risky. So again, the picture could change, but for now, I am not encouraged that this is anything other than a short covering rally. It doesn't have a lot of legs, and we may I'd really like to see the market hold the 37.75 area, or we will exit our swing buy position with a nice profit. So that's kind of what I'm looking at right now. Again, looking out there to the 21st of October for the next important low, and ultimately, though, the bear market low sometime next spring. So I'll leave it there. Have a great day trading, and head over to the blog. Also, if you like these videos, hit the subscribe button. We'd love to have you part of our community, and give us a like.